In August of 2025, the price of Ethereum hit a fresh local high, and that same month, Ethereum's network revenue came in at $39.2 million, which was actually a 75% collapse from August of 2023. Now, I want you to listen to that again. The price went up, but the cash flow went down. And by every conventional metric a finance person uses to value an asset, those two numbers should move together, but they moved in opposite directions. Now, this wasn't an anomaly. This was the entire year, and once you see what's actually pricing this asset, you can't unsee it. Every coin, every token in this entire market is a meme. Some of them just happen to also point at code. And I'm going to spend the next 6 minutes proving that, because once you accept it, the whole market reorganizes. Here's the claim, and I want you to feel how uncomfortable it is before I defend it. A token, any token, is not an equity claim. It's not a productive asset. It's not a slice of a discounted cash flow. It is a bearer instrument for belief. That's all it is. That's all they ever have been. Now, the reason this is hard to accept is not that the evidence is weak. The evidence is overwhelming. It's hard to accept because the utility frame is psychologically comfortable. It lets you feel like an investor instead of a participant in a belief market. It gives you a story you can take to dinner with people in suits. It lets you avoid the embarrassment of admitting that you and the guy holding a Dogecoin are doing the same thing, just at different points on the dignity spectrum. I want you to take the resistance seriously, because dismissing it makes me sound smug and it's not actually fair. The utility frame works as a coping mechanism for one good reason. Code is real. Teams are real, roadmaps are real. When you point at Ethereum, you can point at validators, you can point at 36 million ETH stake, at over 1 million validators, at smart contracts that have settled trillions of dollars. None of that is fake. And when you point at Solana, you can point at 65,000 transactions per second. A Visa scale throughput is a real engineering achievement. So the conventional finance brain question becomes, how can you call these memes? They have substance. They have measurable output. Dogecoin has none of that, and Dogecoin is obviously a meme, so Ethereum can't be in that same category, right? Wrong. And the reason it's wrong is the most important thing I'll say in this video. Forget crypto for a moment. Let's go to the cleanest case study in modern markets. In January of 2021, GameStop, a brick and mortar video game retailer in secular decline, went from under $20 to $483 intraday. In 14 trading days, a surge of roughly 1,500%, 140% of the float was shorted at the peak. Now, the fundamentals didn't change, the cash flows didn't change, the business was still dying. What changed was the story. A Reddit forum decided GameStop was a symbol of retail versus Wall Street, and once enough people believed that story, the price had to follow, because price is belief expressed in dollars. That's it. That's the entire mechanism. Now look at Dogecoin. It was created as a literal joke. Infinite inflationary supply, no smart contracts, no utility roadmap. It peaked at $88.8 billion in market cap on May 8th of 2021, and that was bigger than Ford and bigger than Twitter at the time. Now, was that price wrong in a discounted cash flow sense? Sure. But the market trades on belief intensity, and the belief was real. The market cap was real. Now, back to Ethereum. August 2025, price at local highs, revenue down 75% year over year. Massaria, which is a big crypto firm, posted exactly this paradox on September 7th of 2025, and it went viral because everybody in the industry saw what they saw. Fundamental are not what's pricing this asset. The story is. The story about it being the world computer, being institutional grade, being the settlement layer of the future. The story is what moves the price, and the story in the precise technical sense is a meme. And there's actually a name for this. George Soros built his entire career on it, and he called it reflexivity. The classical finance view says fundamentals exist objectively. The market discovers them, price converges on truth. Soros said this is wrong for any asset where perception affects the underlying reality. In those markets, belief and fundamentals feed off each other in a loop. The higher price attracts more believers make the price higher, and the higher price changes the fundamentals, which makes the story even stronger, which moves the price. Tokens are the purest reflexive asset humans have ever invented. They have no underlying business to anchor them, no cash flow to value them against. Their entire reality is the belief in them, measured in price, expressed in market cap, and broadcasted across social media, which feeds back into more belief. The token is the belief. It is a bearer instrument that represents nothing other than the conviction that other people will also believe it. That's not a flaw of the asset class. That's the exact design of the asset class, and the assets that succeed are the ones that develop the most durable story, the most reflexive float, and the longest compounding loop. So here's the frame that breaks the conventional model. Utility is not the opposite of meme. Utility is a type of meme. It's a particular type. It's a type that is unusually good at justifying its own existence in conversations with serious sounding people. Ethereum is the world computer. That's a meme. It's a story. It happens to point at real code, real engineering, real activity, but the story is what's being priced. If tomorrow you proved mathematically that Ethereum's TPS would never improve, the price would still be set by the strength of this story being told about it. This is why utility coins command a premium, not because they are a different asset class, because they are a more durable story. The story is harder to disprove, harder to abandon, more institutionally legible, a story that can survive a bear market because it has artifacts, GitHub commits. But the artifacts aren't the asset. The belief is the asset. The artifacts are just what makes the belief sticky. Once you internalize this, is it a meme coin or a real project question stops making sense. Every project is a meme coin. Some meme coins just have better PR. So if every token is a meme, what should you actually be asking? You should be asking three things. One, how strong is the belief? Not how clever is the technology, not how impressive is the roadmap. How many people are emotionally, financially, and identity level invested in the story being true? Is your actual demand floor. Now, two is how reflexive is the float. When the price goes up, does that cause more people to buy through visibility, through FOMO, through validation, or is the holder base structurally rigid? The most explosive moves come from assets where price appreciation itself is marketing. Three, how can the story compound? Some memes have a 6-month half-life, some Bitcoin, gold, real estate run for decades or millennia. So that's the entire framework: belief strength, float reflexivity, story duration. Those are the variables. Everything else, the white papers, the TPS metrics, the gas revenue numbers, those are inputs to this story. Those are not the asset. So I know this is uncomfortable. The utility frame lets you feel like a serious person, like you're doing deep analysis, like you're not in a casino. But the data is what it is. Ethereum's price went up while its revenue collapsed 75%. Dogecoin hit $88 billion as a joke. GameStop went up 1,500% on a Reddit thread. None of these are anomalies. They are the rules of how reflexive assets price themselves. The question isn't whether the asset you own is a meme. The question is what kind of meme and how long this story will hold. You're participating in a belief market, and the sooner you accept that, the better you'll get at it.